All right, welcome to our webinar on the risks and opportunities of SMSF pensions. So today we're going to spend some time helping you to understand the state of play of pensions and some of the analysis as to why we have a set of documents that you might be using from your SMSF software and how that actually differentiates from the documents that you'll use through Smarter SMSF or potentially other document providers as well. Part of today is to actually help you to understand why Smarter SMSF documents have been created in a certain way. And we're going to work through many of these issues today to help you identify where those risks actually sit in SMSF pension documents and the opportunities that you get from using documents that naturally relate to the fund deed as well. We'll take some time today working through some of the key features of our SMSF pension documents and run a live demo because we've done a lot of work over the past 6 months or more in our new pension documents that include and incorporate the ability to create a two-step process, and that being where you may want to start at the 1st of July, you can include that unknown balance and then go through, and once the financial statements have been completed or you've used some other valuation guidelines to determine that commencing value, you can then obviously do that second step and confirm that as well. And we'll finish off with a little bit naturally about our document suite and what we have available. And again, if you have any questions that as you go along, feel free to ask them and I'll be more than happy to cover that off. So in terms of the state of play of SMSF pensions, there certainly has been what I'd call a historical gap in the provision of available SMSF compliance documents generally, and in particular as pensions have evolved. And we know from a retirement income covenant point of view and the fact that the government right now is spending a lot of time and focus on retirement, and in particular, the legislating the objective of super as well, the SMSF sector is quite mature in terms of retirement income streams and the strategies and stuff that all take part inside that phase of the superannuation life cycle. Thinking about TRISs and the moves to retirement phase, the payment of account-based pensions, death benefit pensions, and more. Now, the reality of that, however, is that there has become a much greater focus on the documentation that is required around pension phase. And a lot of that is naturally to manage the various legal and compliance risks that we see in the SMSF sector. And you've only got to go back a decade or so, and we saw within our SMSF software the ability to produce templates like binding death benefit nominations. And if you look today, those types of things now no longer exist, being able to produce those things from your software because of the legal and compliance risks that we've seen through various case law that deal with the way in which a binding nomination needs to be completed and naturally the effect that needs to occur for it to be valid. So this is very much the same issue that we are starting to see present in respect to the payment of superannuation income streams. And I think the reality is we will see a case, and I'm sure there'll be solicitors in the future that will challenge the effect of a reversionary pension and whether it is on foot or not, and therefore whether the pension would continue or it would be left to the discretion of the trustee, all because of the fact as to whether the pension on foot was actually established correctly, and therefore the reversionary is legally binding on the trustee to continue in its own right. Just like we have seen over the journey with those various decisions in respect to binding death benefit nominations. And we know the level of detail that the courts look at, not only in terms of the deed itself, but the form in which that nomination has been provided and the procedures that need to be followed to ensure that occurs as well. And therefore, what we have historically seen is a heavy reliance on our SMSF software providers to support practitioners with these templates. But the reality is there is little or no alignment to the fund's governing rules. And therefore, it naturally asks the question, does that pose a risk to the client and the potential estate planning outcomes? And does that therefore pose any risk and challenge to the organisation that is doing that work for the client as well? Now, a way in which many firms or some firms have looked to overcome that is that they've then looked to apply or create some internal templates for pension documentation and investment strategies and a whole range of other things. And a lot of that is because of the alignment to the deed that they actually provide. So the issue here may be far less about the technical ramifications, but more about, well, how do we practically make sure that we keep this up to date? How are we ensuring that it's an efficient way of doing things, it's an effective way of doing things from both a time and money point of view? So these are all things that we have conversations with clients each and every day. So this is probably the most common one that we get asked. So we're currently preparing our pension documents for clients within our SMSF software. It's hugely efficient for us to do it, but the more I read on this topic, the more I'm starting to question whether this is the right approach that we should be taking. Okay, and therefore, what are the potential gaps? What are the risks and issues in this approach? So part of what we're trying to help you understand today is, what are these risks? What are the opportunities that come off the back of it? So let's drill down on this from a technical perspective before we jump into the practical side of things with our Smarter SMSF platform. Okay, so when we look at the document format here, from a software point of view, it provides documentation in the form of things like resolutions or minutes of meetings. So you can see a couple of examples there with the BGLs and classes, and SuperMate is obviously in the same sort of thing. So there's an assumption here being made that the pension can be created with minutes or resolutions. But is that actually an accepted form of documentation to be able to start a superannuation income stream in accordance with the fund's deed? So what does the trust deed actually say? There are providers out there that require an agreement, a contract between the trustee and the member around the commencement of the income stream. Quite clearly, that's been drafted in a way so that you produce and prepare the documentation supporting the payments that meet that obligation. So first and foremost, be very clear in understanding what the deed says and the form that it is in to be an acceptable method to validate that the pension can actually be paid that way and is on foot. So then what we need to do is we need to understand, well, what does the law talk about around when a pension commences and ceases? And we've got our, I call it the Bible of paying pensions here. So tax ruling 2013-5 about when an income stream commences and ceases. And what it says here around the commencement of an income stream is that it must be determined by reference to the terms and conditions of the income stream as agreed to by the trustee and the member, the rules of that income stream as set out within the governing rules. So we need to ensure that there is agreement between the parties. We need to ensure that it is appropriately documented in the conditions of the income stream, and we need to make sure that it aligns to the deed itself. So you can see in the bottom left-hand corner here, we've got our Rule 25.1 within the Smarter SMSF deed. That is broad so that we don't need to continue to update this. It's not prescriptive in terms of changes that may occur in respect to the payment of an income stream. So we do that very deliberately so that each and every year, we don't necessarily need to go about and make changes to the deed to accommodate for any prescriptive stuff that we may have had within the laws and then within the deed that would have naturally followed what the laws said. So you can see there, it says when a member meets a condition of release with a nil cashing restriction, they may take a super lump sum or commence one or more income streams. And there's obviously other elements in there around transition to retirement and so forth. But then this is what we need to start asking ourselves. So what are the terms and conditions being referenced within the income stream? So are they explicit within the pension documents, or are they silent and then relied upon back to referencing in the deed? which means when we look at the SMSF software documents as a good example, typically what you're going to see in the documents is that the pension can be paid in accordance with the deed. But the deed says, well, yeah, sure, you can pay an income stream. So there's actually no real procedure and structure within those pension documents, nor the deed, and you end up with these circular arguments and really getting no resolution on a number of topics that may or may not be relevant as part of that process. So again, what you'll see shortly with our Smarter SMSF documents is a lot of the procedural aspects are set out within the pension documents. And we can have other aspects above and beyond what the Regulation 106 talks about, and in particular 9A when it comes to account-based pensions. So if you wanted to insert a maximum into an account-based pension, well, you could do so. It's just an additional term or condition that you could impose into the terms and conditions between the trustee and the member of the fund, so long as all of the elements of SIS Regulation 1.06, and within 106, you've got like 9A as well that relates to account-based pensions, that allow, as long as they are being met, then the pension would be complying for the purposes of the superannuation laws. So understanding how the deed defines how the agreement applies to start the pension, absolutely crucial, as we said before. Does it require it by deed? Does it require by resolutions, minutes, or is there some other mechanism that would do it? But most importantly, what you are looking for is a two-way arrangement. So a contractual arrangement between the trustee and the member. Because if you actually have a contract here, then there is scope to naturally allow for the terms of that contract at some point in the future to be changed if they needed to, but the parties are obviously bound by the terms of that contract as well. And as I said, you can, if you want to, add into that contract where agreed between those parties, additional rules that may sit above and beyond what the regulations may actually just simply prescribe. So using the standard software documents, making sure you are reviewing that information against the deed, and therefore making sure that you're actually not posing any risks to the operation of that income stream. So a few things there to sort of wade your way through, but a couple of important tips there that you need to be really conscious of. And that, again, the differences between what the deed might be looking at and what you might be producing currently if you're using, I guess, a standard set of documents, in particular if they've come out of your software. So then it comes down to things like pension PDS. So do you actually need one? Now, we know that our SMSF software doesn't actually have any obligation to require a PDS. Now, the Corporations Act here requires a PDS to be issued when a member converts from accumulation to pension phase. Okay, so there is an obligation. However, there is a limited exemption that does exist if it is believed on reasonable grounds that the member has received or has and knows they have access to all of the information the PDS would be required to contain. Okay, so there's an assumption there that they're the member and the trustee. So therefore, they know, they think that they know everything in respect to this. So therefore, there wouldn't be any obligation to issue a PDS. But the risk here is have you actually then made that decision for the client by not issuing the PDS to actually help them understand how the payment of that income stream would operate? Because the default position, in my view, is clients' understanding of their obligations as a self-managed super fund generally are insufficient. They're not at the level of knowledge around superannuation that you are, and the obligations of them to pay the pension as the trustee dealing with the pension, but also in receipt of it. They might know the obligations around minimums and what they need to be paid each year, but the actual mechanics of that pension, they're not really going to know. And that's why issuing a PDS, in my view, is really important. Okay, so again, your software doesn't provide the PDS. So again, there's no specific connection to a deed. So therefore, by default, they can't really issue a PDS to help the member understand what should be included and how it should be included. But in my view, definitely should have one. So what should be included in that PDS to benefit the member? You're looking at the type and the term of the pension. You're looking at the obligations from an admin, tax, legal, actuarial considerations in establishing and running the pension, some advantages and disadvantages, commutation rules were relevant and reversionaries, estate planning implications and all that sort of thing. And then what you'll see on the right-hand side here is we also include a member acknowledgement. So what you've got here is a signed document by the member demonstrating that they actually have been issued this as part of the commencement of that income stream. So again, just getting all your ducks lined up in a row here becomes really important, and understanding what the client is entering into from a contractual arrangement between themselves as a trustee, wearing their member hat, and then it's really drilling down into these other aspects that we're about to jump into around starting a pension. And what you can see here is something that we've developed over the past 12 or so months from a real life example. And this is where, and our pension documents, we have thousands of them produced each and every year across our membership, and those are order on a pay-as-you-go basis. But we have a process within our pension documents where in essence, they're confirming a previous oral request. Okay, and that oral request complies with what tax ruling 2013-5 says, and I might move to that very quickly here, because what TR 2013-5 talks about is under paragraph 12, the commencement date may occur before the due date of the first payment, depending on the rules that govern the income stream, but the commencement date cannot precede the day of the member's request or application. So further, the commencement date cannot occur prior to the day established as the commencement day in the terms and conditions agreed to between the trustee and the member that will govern the income stream. So what does that mean? It means that we need to have agreement between the parties to start the pension. What we do in our pension documents initially was we had an agreement between the trustee and the member orally that was then confirmed by virtue of the pension paperwork. And this overcame the need to have to backdate our documents. So if we're producing paperwork in October or November around the financial statements, and that pension was to start at the 1st of July, we're not backdating that documentation. We're now simply confirming the request that was completed orally between the trustee and the member to have started it at that point in time. So in that instance, again, it's an agreement of those terms and conditions, and then we're evidencing that particular process. So in this instance, we had a client that in essence determined to start on the 1st of July that year. And by the time that the accounts were completed in November, that client had unfortunately passed away. So we're able to get around that process through the use of the LPR and so forth, but it got us down this path of actually now giving an alternate way in which you can prepare documents. And what we're doing here ultimately is a two-step process whereby a written request can be provided initially where we don't know the balance. And in that instance, we get the notification, the request from the member, there's an identification that they want to start. We then notify there's a decision being made to commence. The commencing values will be determined at a later point in time, but the details are in essence confirmed contractually between the member and the trustee at that point in time, i.e. the 1st of July. Then once we know the balance, so the financial statements are completed or the purchase price is determined using valuation guidelines, we then go into our second step. And this is about notifying the member of that pension commencement. Okay, so this has come about simply off one of our members going through a particular scenario. And I'll show you shortly some of the efficiencies that we've done throughout that process as well. So again, that's the evidence and the basis as to why and how we've in essence got our oral request put in place, but also now what we've done that deals with it in a written request and then confirmation basis. So the other part here is looking at things like payment discretion. So when we look at our payment details about how they're looking to pay the pension for the year, we want to ensure that there is potentially a level of discretion in dealing with the benefit payments. Now, that doesn't necessarily exist within the SMSF software documentation, because it would talk about, I wish to be paid monthly, I wish to be paid quarterly, I wish to be paid annually, rather than potentially through a discretion of the trustee. So if it's monthly and it's stated in the pension contract to be monthly, then the trustee is bound by the contractual arrangement between those parties. And you can see there an example that the ATO has actually referenced, so QC 39769. And we can see that in that example, it says, well, the member has withdrawn an amount in excess of the minimum required from pension 1, but failed to meet the minimum pension required from pension 2. So this is not simply just saying I can reallocate between them. Otherwise, we may have a scenario subject to the terms and conditions of that pension. We may then be failing the obligation of pension 1 by reallocating it from pension 2. It doesn't mean that they've failed the minimum, but you've failed the pension standard because you had a contractual arrangement between the trustee and the member to pay $5,000 per month in respect to that income stream. So having discretion here that rests with the trustee gives us that flexibility to overcome that issue, which is why, again, we've put that in the pension documentation. And again, the ATO reference here, the trustee must ensure that the pension meets the minimum payment requirements. It is irrelevant that the combined income received from member A from the 2 pensions equates to an amount greater than the combined minimum payments required. Subject to satisfying all the conditions, the trustee may be able to apply the concession, so i.e. the minimum pension shortfall, as the fund as being paid continuously despite the underpayment. Okay, so in that instance, they're saying, even though you might have paid it collectively on the 2, you don't have the ability to allocate between them unless it is documented correctly that would allow for that discretion to occur. Okay, so again, we deal with these sort of specific issues within the Smarter SMSF pension documents where it's not necessarily the case within the SMSF software documents. Now, how do we deal with the pension documents and its connection to the deed? So one of the things that we do is quite unique is we have our pension documents along with a number of other documents to become what we call a special rule of the fund. And what this does is in essence says that when we have that arrangement put in place, those documents become wedded to the deed as if it was a rule in its own right. So rule 1.8 here talks about that the trustee may be able to create an additional rule where authorised under the rule of the fund, including for a number of things which include the member pension. Any additional rule may become a special rule of the fund if declared by the trustee as such and may not be varied by any variation of these rules unless with a specific consent. So why has this become important? Well, this is important because we then have the ability to, where agreed to between the parties, to be able to change the terms and conditions if we want to. So if we want to be able to add a reversionary, remove a reversionary, change the level of reversion, all these things can be done, and a number of other things, if agreed to between the parties, to alter those conditions of the pension without having to stop it and restart it. And that may be important for a number of reasons. It may be around age pension entitlement. It may be around Commonwealth Seniors Health Card. So where we've got sort of legacy pensions in existence, where we don't want to have the asset counted, it's been exempted previously under the Commonwealth Seniors Health Card, or it's been treated differently under the deductible amount rule for age pension purposes, but it also may have an impact on commutation and repurchase for things like transfer balance cap as well. So that concept of a special rule is crucial. Now, there are a number of other gaps to consider. Again, thinking of things like reversionary, what level of reversion, does it allow for reversion but to be considered, factoring in transfer balance cap. It might also want to factor in the new proposed $3 million threshold as well. We might look at asset segregation. So the ability to go, well, do we want to set aside specific assets to deal with the payment of that particular income stream. Strategy considerations, so the new pension commencement form that we've got allows for things like the payment or the election of treating amounts above the minimum here from this income stream potentially as a commutation. But all these decisions need to be done prospectively. So building this into the pension commencement form is something that ensures that we are doing that prospectively rather than reactively, which prejudices the ability to have a valid commutation consistent with what we saw in tax ruling 2013-5 and also within PCG 2017-5 off the top of my head. And the last one here, I guess, is in two parts. So how are we dealing with the signing of documents where a member's unable to be signed? We at Smarter SMSF are currently building out some additional features to deal with enduring powers of attorney. But the other really important piece here with signing capacities is around whether these documents can be signed electronically or not. Okay, and I haven't touched on this in here, but I'm going to right now. So one of the things that we have recently added into the Smarter SMSF deed is a new Rule 30 that deals with the ability to sign documents in a technology neutral way. And we've done this to ensure that we can actually sign things that are allowed under the superannuation laws currently to be signed that way. And in theory, we've only got financial statements. So we're allowing for anything that the Electronic Transactions Act would allow for, that we have an exception to the exemption of. And if you want to find out much more on those sort of topics, we've got other sessions that we've run on electronic execution to sort of talk through this. But ultimately, where we have certain documents where it is procedurally based by virtue of the deed, we want to be sure that the deed is quite clear, that we can apply a technology neutral approach to signing of these documents. So the ability to pay a pension is set out within the regulations, what the obligations are to ensure that we actually have an income stream. But it doesn't talk about the form in which a pension becomes valid. That is dictated by the procedural aspects that are set out within your trust deed. So the Smarter SMSF deed will allow for you to not only prepare the pension documents in accordance with a range of things that we've already spoken about here, but it will also allow for you to have the trustee and the member look to sign those documents utilizing either an electronic means. So that could be through a digitally signing mechanism, DocuSign, any of those sorts of things, but equally signing it, scanning it, moving it to the next person, or in a physical sense using wet ink. Okay, so again, if you want to be able to utilize these sort of things, you need to make sure that the deed is up to date and allows for these certain things to be signed that way, and will move with the laws as they continue to change, which they actually are at this point in time. So let's go and just have a quick look at some of the key features, and I'm going to jump into the actual form in its own right. So there are a number of things that we have set up within our pension commencement documentation. Many of you may have used the pension docs before. If you haven't, here's a summary of what we have within our pension document. So our pension commencement is not only for account-based pension, it is covering both account-based pensions, transition to retirement income streams, and death benefit pensions. That is pensions where they are not automatically reversionary to another beneficiary. We do have in our pension suite documentation that allows for the auto reversionary pension to continue. Now, we do have with our pension documents integrations available with Simple Fund 360, Class, and SuperMate. So all of these are pre-populating the details of the income stream. Okay, from a process point of view, you'll need to set up the pension within your SMSF software. And then from there, once that information is within the software, it will then draw into the form all of the relevant information that you need to be able to produce that documentation. Now, if it's multiple steps, in the first instance, you'll be able to access fund details, trustee details, member details. If you then have all the account balance information, then after that, you'll be able to access all the account balance information as well. You do have multiple options here in terms of the documents you want to prepare. So you can utilize the new two-step process where you can prepare, in essence, the written request and then the confirmation once the balance is known. Or if you already have the accounts done, you can use our existing oral request process, which is really that one step around the commencement of the income stream. One of the features that we've done with our two-step process is we know that once you've prepared that information once, you don't want to rekey it again. So we create a saved order after the initial order with the unknown balance. And the important piece in here is once you have that balance available, you'll simply be able to refresh that information to import that data as part of a second step. So this is something that no one else has really developed around this, about, again, saving you time in the process, because we know we're up against those that just produce the templates within their SMSF software. We've highlighted the risks to you. What we're trying to now do is save you the time and make it as efficient as we possibly can compared to what you would ordinarily do out of your SMSF software. And we've built in a number of smarts, okay? So things like if the member is over 65, it's only going to allow you to prepare an account-based pension, not a TRIS, because the condition of release is naturally restricted to the member having attained age 65. And if there's a nil cashing condition met, the information is not going to populate, or you can't add that information into preserved and restricted benefits. It will only go into unrestricted preserved benefits. So we've built into this legislative requirements to ensure that the preparation of this is done in a way that is hugely efficient and manages the risk within your own practice as well. We keep going. It allows for the purchase of members' entire balance or selected a different amount. So an actual purchase price might be $1.9 million if they're starting to their transfer balance cap. And as I said, you can also start with an unknown balance. We'll do all the tax-free taxable calculation. We'll do all the minimum percentages. If it's pre-1 July 23, which I know some people are still doing old accounts, it'll deal with the 2.5 or the 50% reduction. So the 2, the 2.5 and so forth, rather than the 4, the 5, the 7 and the like now. It'll also do our pro rata minimum calculations where it started during the year, and it will do a minimum of 0 where the pension started after the 1st of June. So all this stuff is covered off for you as part of the process. You have flexibility in your payment options, like what we said earlier around trustee discretion or some regular time frame, including annual, and the election, as we said before. You got your reversionary options, you got your segregation, and so on and so forth. So we do have some unique features, as I said, as well. One of those is it allows you to choose whether you have pensions that are being paid under the Smarter SMSF deed or not. So what that means is we know, as much as I'd like everyone in the SMSF industry to be using our Smarter SMSF deed, that is not the case. So it doesn't mean that you can't produce these pension documents. All we do is if you say that you are not under the Smarter SMSF deed, we are removing specific information out of the pension documents, such as the special rule of the fund that we spoke about before, and the concept that we have as a paramount document. And I'll touch on that inside there, but in essence, what we're doing is allowing you to make a decision as to whether this pension document, in the event of any conflict, will outrank any other document that might have a different outcome, such as a binding death benefit nomination. So, and the last thing, I guess, is if you are doing a unknown balance process, we will, in addition to sending you the normal emails around the generation of the document and so forth, we will also include for you in here just the details of that next step. So what you need to do and how you need to go about doing it. So I am going to move over now to the platform. We're going to spend some time having a bit of a look through that pension document. So what you can see naturally is our platform here into our documents area, and you've got our pension commencement document or pension document. So we can either look for it specifically, we can search over it and so forth. So our existing pension commencement one that we've had forever and a day still exists here at the time for now. We will be decommissioning this over the coming months with a view that everyone will then be using this pension commencement with the unknown balance. So you have the choice to do those two things. Now, what you can also do, of course, is connect to your SMSF software class BGL SuperMate, and you would be able to pre-populate the information into your form to enable the importing of the data to go through as well. So what I've done here is, just to speed up the process a little bit, is I've prepared one before called Demo 1 Superfund. And what we did is we've created this with an initial unknown balance. Okay, so what I've got here is our document. I've just realized I've actually got one open here. So we have our Demo Superfund. So this is the two-step process. So we've got the request to commence. We know that it's not yet done, and we'll need to confirm that based upon the finalization of the accounts. We've got all the other requirements around the data collection of this pension, including things like reversionary and segregation and the like. We get to our resolutions. We've got some, again, confirmation of a number of things about the frequency of the payments, the type of payment being paid, the powers to pay the pensions, investment strategy, transfer balance account reporting. And then we get to many of the procedural aspects about the way in which this pension is to be paid, which is, again, different to, or is lining itself up with, is probably more relevant to what the deed is requiring, or is what is stipulating around the payment of that income stream. And again, we then would have our recognition through the acknowledgement back to the individual product disclosure statement is then provided, which goes through all of the particulars around the minimums and the reversionary and who can be and the segregation, all those things that we spoke about earlier under the PDS. Okay, so that is step one here as part of that process. Now, what I also mentioned earlier is once we have completed that initial written request, under our saved orders, okay, so in here and then under saved, what we've now done is we've created the next step for us to go and complete. So what I'm going to do is show you now a bit more inside this form to show you some of these features that I've been talking about with the slides so far, because this is now saving you time of not having to go in and rekey all this information. So we've got all the detail already here now in respect to the fund, the details, the directors, who the member is, the date of birth, all the qualifying conditions about this account-based pension. So when we get to our next page here, this is now where we've got a little bit more information available to us in respect to the payment of the income stream. So we can see here, is it being paid under the Smarter SMSF deed? Yes, it is. So if you select no, then what we do ask, and you can see with the tool tips here, it makes reference to all the relevant things. But if it's a yes, it'll pre-populate all that stuff immediately there for you. If it's a no, we do actually ask whether you know the rule or clause. If you don't know the rule, then we'll insert a generic paragraph into the resolution for you. If you do know it, then you can go in and you can put the specific rule or clause in there as well. So the key thing, as I said earlier, is if we're using the Smarter SMSF deed, then we will be ensuring that it is annexed as a special rule of the fund. And again, you have that choice of whether it's a paramount document or not as well. So you can see here, it's already done the calculation of the age, of the preservation requirement of what they would have been at that point in time. It doesn't allow us to choose the type of pension because it's an account, because they are over the age of 65. That is the condition of release that's been met. If we have multiple pensions that have been run inside this fund for the member, again, it will populate the pension name or description that you have within your SMSF software. So what you can see in here is the first step of this pension commencement was we didn't know the account balance. Okay, so now that we do, what it's allowing us to do is to then link the initial request that was done to the confirmation that we're doing now. So you can see in here, yes, this was the initial request. The initial date of that request we would put in, which was, say, the 1st of July 2023, and we completed the 2023 financial statements to include the balance. Okay, so now what you can see is we've got this information in here, but we actually don't have any of our components. So what we can now do is we can go in and we can refresh. We can choose the software integration that we have. It will allow us, on the basis, I'm hoping I'm connected here. I did connect this earlier. No, I'm going to have to reconnect. But in essence, what we're going to do, we're going to go in, we're going to find that fund. We're going to reconnect. Actually, I might go back a step for a second. I might try the simple fund one. Refresh. No, thought I had that one, sorry. I'll go and connect here. So all I'm doing is refreshing the connection here with whatever software that we're using. Sign in. It's probably going to ask me for multi-factor authentication. Yes, it is. So I confirm the integration. And then what that's going to do is, if I go back to, I've just realized now, hopefully I haven't. Next. Just really better make sure that that comes up in a new tab so that we don't lose all the detail, as I just saw then on the screen. But in essence, what we're now doing is going back in, refreshing the data. I'll use the simple fund example there as well. Sorry, just before I do that, I'm just going to go into, yes, there, refresh, simple fund. Select your fund. Might just use that one. No pension accounts available. Good. Okay. I need to find one that actually has a pension account, and I'm not going to spend too much time on there. You get the drill. Okay. So what that will do, as I said, is it will then grab the data from the specific account. I think I'm a year ahead on that, Luke, when I had one from the previous year, and it will drop that detail into here. I'm just going to put a number in here for the argument now. And then from here, it's naturally you can make choices around tax-free, taxables, all that sort of stuff. Okay, so the joys of live presenting, but you can see there, once you've got that connection, you've got your data set up inside your software, whichever one, Class, BGL, SuperMate, and that data, once that connection's been established, it will populate that. You can see in here, because it's been started after the 1st of July 2023, or from the 1st of July is probably the right word to include that. We've now got our 5%, not our 2.5%. We have a choice on previously, we'd selected at least the minimum. And then we have the choice here to say, well, do we want to make that election if we're taking at least the minimum? That if we do take more than minimum, do we want to be taking that from a commutation or from an accumulation account? So you've got some choices here to treat above minimum pension payment amounts, and in particular, if it's a commutation from this income stream, making sure that we have a prospective resolution that complies with the requirements of what the commissioner says is a valid commutation. And again, then we have that choice of how often we want to be paid. Is it weekly, monthly, quarterly, twice yearly, or in this instance, at the trustee's discretion? Okay, so again, you can see the unique characteristics that we're building into this form that ensures that we have a pension that lines up with the deed, but it has a number of risks that we're managing but opportunities that we can actually take advantage of strategically with our clients as well. So here, again, we've got our pension reversionary details. We've got Jill, spouse. We can change to percentage dollar amounts to a TBC if we want to. We can make that 50% if we wanted to instead of 100%. And then finally, we've got this concept, like I said, of a paramount document. So we've got tool tips that run throughout these forms to help you understand what and why we're doing particular things. And then finally, we're going to choose whether we have assets set aside to support the payment of that pension as well. And importantly, if you are setting aside and we've got our commencing value there, you need to ensure that the calculation of both the cash and the assets that are held actually match the commencing value. So again, we've got some of that oversight that sits over the top of this as well. So then if I just select no, and then it will allow you to review that particular order. Once you've reviewed that order, you're happy with all the detail in it, you can then simply submit that. And it will take a minute or two to then generate that particular document, just like it does with many of the other documents. So you can go through and you will get an email confirmation with all this information that you can see there. Now, if you are a member, what you'll see is the price is obviously zero. It gets deducted from your subscription counter. If you are a pay-as-you-go orderer of this information, you will get a unit price there, and then you would need to apply a credit card for payment prior to the order being able to be placed. Okay, so just to note those differences for most of our members, or those that are members, obviously that process of the document subscription, one, it saves time there, and two, your average cost per document is probably 40% cheaper than what you'd be paying on a pay-as-you-go basis. So I'm going to let that now go and take its time to order, and I'm going to shoot back to our slides whilst I let that process. And just go through a couple of other things that I wanted to make you aware of, because what we also now have available on here is when we think about this sort of work being done within your team, is that we do now have available to you through our subscriptions this concept of user reporting. And what that means is that if you want different staff to be undertaking different tasks, you can now do that. And then if we have staff member A, might be a couple of years into their work as a graduate account, whatever it is, you're the manager, you're happy for them to use the integration, prepare all the paperwork, but you don't want them to submit that information yet. You want to be able to check it before it then generates. You have the ability to now undertake that. But equally, you also have the ability to have oversight on all the completed documents that have been done by any of the team members. So you may have that staff member that initially you want to have some oversight on what they've done, but once you're happy with them being able to go through and work through that, all you want to be able to do is be able to access that at any point in time as well. And that subscription option here around user reporting allows for you to do that. So if I just duck back to here whilst we're waiting for that to process, you can see here we're under our My Account, we have a user reporting area that gives our subscribers the ability to control those that have access to the subscription, and you'll be able to add firms into that through an invite process, add members of the firm into an invite process. We're adding some features to it shortly that allow you to edit and remove and so forth, and transfer orders between different users and the like. But what you can see here is I can go in and go, okay, me as the parent user here, I can go in and look up something for David. And if I want to go in and find that pension commencement that he's just done, I can go in, I can click that particular link, and then it will enable me to go in, find that order, and review the order, and then allow for me to submit that. But equally, I can go into the completed orders, and again, I can go into David and say, well, David's not here today. I have a client meeting that needs to be done. I need to go and grab the pension commencement documents that he's produced. I can go in under him, grab the document, and there it is. problem overcome. Okay, so there's a number of things that we're building into our platform that enables you to look at and manage the workflow. So there's the form that David was working on. I can go in and finish it off or review it and then submit it if I want to do so as well. So just to, again, to make you aware of those couple of features that we've added into the system as well. So I'm just going to see if this one is actually generated just before I jump to the jump back to the slides to wrap up today. I think it has. No, that was the initial. Oh no, this is the one. Yep, sorry, I just had a bit of a brain fade. So yeah, so our initial request was done with the statutory obligations now completed. The trustee hereby confirms the following details. So we have our purchase price, the pension, the detail, the payment, conditions of release, details, powers to pay, all those things. So all the stuff that that is in essence in addition to that we're now confirming that we didn't necessarily have in the initial written request is now contained within here, with all of the specific resolutions that now become conditions of this pension that are agreed to between the trustee and the member. So the obligations, the separation of the superannuation interest, the requirements around the investment strategy, making sure we're not adding any further capital to the payment of the income stream, that we're calculating pension levels, that we're complying with pay-as-you-go obligations, all those things that we've been talking about that we need to ensure compliance with can be done. And then same here, we can actually then allow for these documents if we wish to be electronically signed, because the Smarter SMSF deed now incorporates that as well. So let's go back and sort of wrap up in respect to today's session. So a couple of things, I guess, from our pension suite. So we've got a number of documents here. Today, we've really just spoken about our pension commencement documents and the fact that there is an entire suite that deal with the ongoing compliance and payment of income streams. So whether that's around satisfying conditions of release, through to pension commencements today, through to lump sums that deal with both in specie payments, cash payments, pension rollbacks. We are currently working on rollbacks that deal with failing the minimum pension standards as well, and building some workflow automation around the rollback and then the rebooting of the pension, commutations, and again, whether that's partial and full, and making sure those decisions are prospective and so on and so forth. Lost pension deeds is something that is definitely unique to us in respect to the Ruman's case in 2018. You can see the list there. It is comprehensive, and we continue to add to this as we go along. And one of the things that we obviously are keeping a close eye on is the previous announcement around legacy pension conversions. So if we ever get to that, we will obviously let you know, and we'll be providing some templates and stuff to deal with that as well. So the most important thing to me is to really understand, if you're looking at pension documents and a broad range of other documents, not only within our pension suite, but also our legal and compliance suite, is to understand where the benefits really kick in a subscription versus ordering on a pay-as-you-go basis. And you can see here we have a range of packages that are available based upon the number of documents you need to order, and we've got a sort of a rough guide there around the number of funds you might have that may align to the number of documents that you ultimately need. Have a chat to David, I think, is the short answer. We'll be able to work through those particular issues with you. Why? What are some of the benefits of members versus pay-as-you-go, other than price, of course? Either way, you do get connections to our SMSF software. You can do a number of things, obviously, that between both members and pay-as-you-go here in terms of the documents that are available and the importing of data and all those sorts of things. But it's from sort of middle of this table down where the differences come. So the fact that you can save the orders and then review, you don't get that functionality on a pay-as-you-go basis. reviewing and completing orders, accessing completed orders, ability to reset orders where there's errors made, making manual adjustments, all those sorts of things are available under the subscription to our members, as opposed to those on a pay-as-you-go basis. So again, if there's something that you're interested in, more than happy to walk you through and explain that in a little bit more detail. So I guess to wrap up today, as we sort of hit the end of today's session, to me, there's a couple of really key takeaways. So the first is, make sure that your pension documents are appropriately aligned to your fund's governing rules. You don't want a client that you know may be at risk in the future, if we think about blended families and the like, or potential challenges. You don't want to be that court decision that had the reversionary pension being challenged because the documents weren't aligned to the fund's governing rules. It is absolutely crucial, therefore, that you get your pension documentation right, making sure that it's established correctly and then therefore managed correctly on an ongoing basis. But it doesn't mean it's all about risk. It's about making sure we're taking advantage of the strategic opportunities as well within here. So the elections, the discretion on the payment, all those sorts of things. And then once you're happy that you've got all that stuff in play, you got yourself compliant documents. It's all about how do we do this in its most efficient and effective way possible. And this is where we've got integrations. We are software agnostic. The ability, whether you're a Simple Fund 360 user, a Class user, or SuperMate user, it gives you the ability to save time to actually go through and complete those pension documents, manage the risk of rekeying and errors around that rekeying, but making sure you're getting the best of our Smarter SMSF pension documents and the expertise that we naturally have within the business. So that's it. As I always say, smart people do stick together. So thank you for joining me today. We will be at the BGL RegTech event in Melbourne tomorrow, so make sure if you are going, come say good day. We are running a SMSF annual compliance masterclass. So for those of you that are our CPD members, you'll be getting your invitation this week. Otherwise, you are welcome to join us. You can go onto the website to find out more and buy a ticket if you want to attend. Here, both Tim and I work through a case study and analyze and unpack a range of issues around the annual compliance. We've got a number of other events that you can see on the events page as well. This webinar, like I said, has been recorded, and like many of these other product demos and other sessions that we do run, we upload those onto our YouTube channel. So I encourage you to jump on there, have a look what we've got, talk about the demos, how the integrations work, how we release different documents and so forth, and subscribe, and you'll be kept up to date with all the things that we run across Smarter SMSF. So I'm going to leave it there. Thank you for joining us. If there are any final questions, please feel free to ask now. Other than that, I'm going to leave it there and have a great rest of the day. Bye for now.